Hey guys, Sean Taggy here. I'm going to be talking to you about acquiring a business. I'm starting on my own journey of acquiring a business, and I also will be talking about how to manage, lead, and grow a business, talking with other owners and people in the industry so you can know the ins and outs of what it's like to own a business, to acquire one, and even sell one someday. I announced my search on LinkedIn last week and got tons of extra connections and other people who have acquired businesses and other people who are deep in their search right now. And it's been super fun to kind of compare notes, talk about the emotional roller coaster we're going through, the highs and lows. I talked to a searcher who's here specifically in Utah, and it's a real small world, especially buying in the range that we're buying. So there's probably 5, 10 brokers to even talk to. We're just in this geographical region in Salt Lake City, Utah, along the Wasatch Front. We have basically the same type of EBITDA ranges, so we were able to talk about how things are going, the brokers out there, and all of that. So it's been really fun and validating just to hear that. It's always good to have those connections. It helps you just get through those emotional challenges and everything. So I am 2.5 months now into my search, and I've learned a ton and also messed up a ton. So it's been really fun to kind of see how things are going. So let me dive into why I think now is such a great time in the history of the world to be searching for a business. So pretty much the stars are aligned and the tailwinds are telling me the macroeconomics and really the generational gaps that are here that this is a great time to be searching. So here's what's going on. If you look up the population pyramid of the United States of America, we have the baby boomer generation. They're at the top of the pyramid and they're a big chunk that goes out. And so the baby boomers, 55 to 65 plus, are all in that retirement age. There are 10,000 a day baby boomers that are retiring. A lot of them own businesses. Now, their kids may or may not want to continue on. So I think that would be their first option. And lots are getting passed down. I know several friends who are having their businesses passed down to the next generation, but sometimes the kids, for whatever reason, don't want to take over that business. Maybe they're already successful in another career. They got burnt out from working with, their parents and their current job. And, from what they're doing, they're tired of that industry. They may be drug addicts and not even able or capable to have the business be passed down and don't have that trust that they built with their parents. Who knows the reasons? Many don't want to take over the family business. So that either leaves the current employees or boom, boom, boom. Here's where us millennials come on in. So the millennial generation is the next big generation, and we are all late 20s to mid to late 30s. We're in our prime, right? We got, several years of work experience, maybe been up to mid-level managers or even owners of our own previous companies, and we're ready to take the reins over from the next boomer generation. So really, if you're a boomer and you don't have that family to pass on to and no one in your company is capable of it, what are you going to do? You need to sell your business, and that's where I'm coming on. People like me and business brokers and a whole community out there, and lots of boomers aren't even aware of this, that they can even sell their business or what it would trade for. They might think it's a scam or that this can't even happen. They may be worried about confidentiality and other things. So I think there's a great education process that needs to go on and kind of some more validity going around with what's going on in selling businesses. So I'll kind of walk through the process of what I've been doing to search for a business. So mainly it's through brokers, outreaching through brokers. And there's pros and cons to my search. I've just limited myself geographically. I want to be by my family and I love Utah. So I'm in the Wasatch Front from like Brigham City, Utah, maybe even Logan, Utah, down to Spanish Fork, maybe Nephi, Utah. And within a, kind of a 30-minute driving radius between that 1.5 hour driving time. So it's good because, I can really narrow down and focus in and know the demographics of this area. It's bad because there's just not that many businesses that go up for sale in this area, right? There's 3 million people in the whole state of Utah, and who knows how many live up here, probably 2 million, 2.5 million up in this Wasatch Front area. And so there's just not that much trading. So it does make it harder to buy a business when you're geographically searched. I know some other people who are nationwide and they will travel and relocate anywhere. I've already done that, I already know the joys of moving, and it's good. It's a fun adventure, but I've been there and done that. So now I'm just limited to the Wasatch Front area. So I've been reaching out with brokers on their websites. There's several on, in here. You can just do a simple business search. I'll label a lot of them in the show notes here, but I'm looking on Biz by Sell is the go-to where everyone puts their businesses. There's a lot of hate on about Biz by Sell that everyone says it's like where the deals go to die. But I mean, I'm finding businesses there, and I see them post the exact same time the brokers list them on their websites. I do know that a few brokers do just already have a network of buyers and sellers, and they don't even list them. They have a right buyer lined up who's already experienced. Maybe they've already done a deal with them before. And so that's what I'm trying to get into. Just show my credibility by being around, following up with brokers at least monthly, but preferably twice a week. I'm just being in touch with them. And it's typically just through a deal, requesting a confidential information memorandum. So that's what they do is the business broker will, they're out calling different owners. They have their website, organic reach. People might Google them, or word of mouth is how they're typically marketing to business owners who want to sell. And they're also locally connected with the communities. And they get with an owner, someone who wants to sell. Hopefully it's one of my, hopefully it's one of the baby boomers and someone who is in the parameters that I want to buy in. And they'll get kind of like real estate, very similar to real estate. They'll get a listing agreement. So give them a certain amount of time to sell the business at a certain price and other conditions. Then they need to gather all the data and information on the business. So the brokers will get hopefully the tax financials, do a little pre-screening, get the profit and loss, the balance sheets and other things, and the assets of the company, and maybe even get an appraisal. And then what they go through is they'll list it on a website. Now, they're not going to blast this out and show all the company information to every average Joe on the street. They actually pre-screen their buyers, and you got to sign a non-disclosure agreement, a legally binding agreement. For me, someone like me looking and seriously and earnestly and has the capacity to buy a business, they will just pre-screen me. A lot of them want to see my personal financial statement and make sure I have at least the down payment money to purchase this business. Or if I have investors, they want to screen that and check that out. They'll ask about the financing I'm getting and other things like that, and hear about my background. So I already have a bio ready. That's a couple tips I have for other searchers out there. I have a one-page bio with a nice, professionally done photo of me, a little bio of what I've done, and then I have my personal financial statement already ready with all my, my net worth, my assets, liabilities, and they can see my liquid cash that I have ready to buy the business with. And that sets myself out quite a bit already there, that I can just blast that off really quickly to the brokers. They don't need to ask around for that. They've seen I've been around the block a few times on this. So then I sign the non-disclosure agreement, and the business broker will then send the offering memorandum, the confidential offering memorandum, or the confidential information memorandum. All of them pretty much mean the same thing. They call them the CIM, the COM, the OM on the business. And typically in the size of business I'm looking for, it's 5 to 10, sometimes 20 pages, goes over the business, the owners, the story, the employees, the financials, a profit and loss statement, typically going back 2 to 5 years, has a balance sheet on there sometimes showing what assets are in there and the accounts receivables and payables due in the business, and just gives me a general overall view of the business. Now, that doesn't tell me necessarily everything. I've also seen other business brokers provide tax returns, which is great because typically, anyone can make up a PDF confidential information memorandum, but showing your tax returns, yet those can be made up, but it's more likely showing that this person is serious, that they actually legit are making that certain amount because they're reporting it to the IRS. Okay. So that's what I'll do. I'll go and scan through that. And if I'm interested, I'll ask some more questions on the business and about the owner. And then I will set up an owner call. So a call with the owner to just get to know each other. And I'll dive into a whole owner calls in a separate podcast here and training. But yeah, so that's really good. That's how things go. So that is going directly with brokers, kind of the traditional way. Now, that's not how every single business gets sold. Another way, and what I've been doing as well, is doing they call it a proprietary direct to seller or owner outreach. Okay, so there are data sites out there, tons of other websites. There's Data Axle and tons of others. I'll label several in the show notes. And I still haven't narrowed down which one provides the best data. A lot of them claim to have a fresh, updated data, but I assume they're all kind of pulling data on businesses, their revenue, their estimated EBITDA, sometimes their number of employees. And it has the NACES code, which is basically like categorizing what type of business it is, plumbing, electric, HVAC. They all have their separate NACES codes, NACIS codes. And those will just tell you how what type of industry the business is in. So I've used that and done some proprietary outreach. Now, this is obviously pretty much cold calling, and you can also try to backtrack, find the owner on LinkedIn with the business name, reach out to them on LinkedIn. You can also try to reach out to them directly on their website or call their office and try to get to the owner, send them emails or anything like that. So I've been doing that, and I've been able to reach out, got about so far 5 direct owner calls. 3 of the owners were actually 4 of the owners not interested at all in selling, but they were very kind and they want to just talk with me. One of them already like bought the business less than a year ago. So I got to hear from another searcher and how it's going. He was an awesome guy. And then 2 other owners, I actually knew one of them, the other one, he was in one of my business masterminds. And then the other was just some really nice lady who just was, giving me some advice on the business and the industry and all of that. So far, no like actual interested owners in wanting to sell the business. And then a couple others are just like, yeah, not interested, leave me alone. But who knows? We'll follow up with them later. So I have a CRM, a customer relationship management system that I'm using to, kind of track them in there and seeing how many calls and outreaches. And then I've probably reached out to probably about 100 different businesses. Another thing that I've been also doing is just straight up Google. You can, someone ranks high on the Google rankings with whatever industry you type in, that helps you out. And I haven't yet, but maybe even Yelp and other things like that would help out with reaching out to these owners and discovering what they are. So there's no system or process down on this. It's just manual data entry. I have a virtual assistant helping me out, someone in the Philippines who's kind of gathering the data, compiling it into a spreadsheet, getting it ready for me, checking out the LinkedIn, the Google, other things like that, trying to gather phone numbers and emails for me. So that's going very slow, but I see that kind of as a long-term approach. What I do like reaching out with business brokers is that owner, right, is probably highly likely to sell. Like they have to go through all this paperwork and all these hurdles. I'm sure the brokers pre-screen the owner, and they're most likely highly likely to sell within the next year and ready. Where if I'm directly reaching out to someone cold call, that's going to take 1,000 or 100 calls to get one owner who's actually ready at this time. So I think it's a lot like planting seeds. As you know, my glory days growing up on my family's fruit orchard, I'm good at planting seeds, and just getting the word out there, and maybe that seed will grow someday and produce some fruit, and we'll get a business to buy from that. So I'm here to stick around. I got 30 years, it's time, and I'm ready to be in the M&A space for 30 years. So that's pretty exciting. All right, so now on to the capital stack. So let me explain how my plans are to go about acquiring this business. So I've sold my personal residence in Memphis, Tennessee that I've owned for about 2 years. It was a property that I actually bought on HUD Home Store. So it was like a foreclosed house. I put a lot of renovations into it and it appreciated over time. And from the renovations, it improved the value. So I got a lot of money from that. I exited my partnership at Memphis Investment Properties, the flipping company I was part of, and also have some other, investments and rental houses in Memphis that I'm currently selling. That has given me, so a good nest egg. So I can last a while, have some years to go about searching for this business. Obviously, don't want to go for years to be searching. Hopefully I can buy one in 6 months. But yeah, so that's giving me, and that'll give me enough for the down payment. So I'm just shy of the SBA loan maximum amount. So let me explain how most people in this lower end of buying a business. So I'm talking below 2 million or $1.5 million EBITDA. This is kind of the range where the private equity and the larger lenders that just traditionally lend on businesses don't really swim in that much, these waters. This is basically pure and only for SBA loans. that you can get. So the SBA loan, it's a 7A loan. It's called the SBA 7A. There's tons of info on it. It's this Small Business Administration. So these are government-backed loans. And what's amazing about them is that you can buy a business and they will loan up to 90% of the purchase price. And you just need to have 10% down. And typically these loans, let me check here. So they are at prime plus 2% to 2.75%. So today is August 23rd, 2023. Prime is at 8.5. So that would be 10.5 to 11.25 would be the interest rate. A little steep, but still works out considering the cash flow on the business. So that's what you need to get the SBA loan. So I've saved up enough of that, and they will go up to a maximum loan amount of $5 million. And then what I'm typically seeing businesses listing for now, talking the typical ones that I'm looking for, kind of the Main Street type of businesses, the residential business services or the local businesses here, they're typically going in like the 500K EBITDA, 750,000 EBITDA to the million and a half EBITDA. They're selling for anywhere 2.5 on the low end to about 4.5, sometimes even 5 times earnings. So if there's a million EBITDA business, depending on the industry, the track record, a lot of different factors, it could go from 2.5 million to 5 million, just depending on the potential and everything like that. But typically I'm seeing 3 to 3.5 multiples for what I'm searching for. So like HVAC companies, roofing, plumbing, electrical, fencing, landscaping companies. And what I typically see is like the harder it is to run the business and expand it and the management team around it, it may go on that lower end of 2.5, even 2 multiple of EBITDA. And if it's kind of more well ran, has a better type of pool of places to market to and buyers, and also has a better management team and more well ran, that same type of EBITDA could go for a 5x. And then what's interesting and what my plan is here is to buy a business in, let's say, the million EBITDA range and grow it 20% year over year for the next 4 or 5 years, get it up to 2 million EBITDA. I find that 2 million EBITDA is kind of the sweet spot where private equity starts paying attention to the deals, and that's typically like their minimum lowest buying parameter. If you can get into the 3 million, that's even better. And what they do is they're bigger, they have more money to work around with, and they'll typically buy these businesses that were trading at a 2.5 to 5x. They'll go for a 4x up to a 7.5x sometimes, maybe more, especially when you get into the 3 million EBITDA range. They can sell for even more. So that's kind of what my plan is, to buy it kind of lower, kind of hang out below like a little mouse, kind of eating the crumbs below these private equity guys, grow it eventually over 5-10 years and sell it to a private equity. Also, if I really like the business, maybe buy some others. So like buy another 500,000 EBITDA business alongside $1 million EBITDA business that I have, and then grow it naturally and get up to that 2 million. And also some other cool things that you could do. Potentially I would like to just hang on to a business for 10, 20, 30 years, buy several others, get into multiple regions, right? Get into multiple cities, maybe even multiple states, and be kind of a regional player. Get it up to the 5 to 10 million EBITDA, right? Is another thing that I'm toying with. Obviously, I need to take this year by year at a time. But pretty much the sky's the limit, and we'll kind of see each year how things are going and what the potential is on the business. And that would be something very exciting for me to do. So I've been debating back and forth on the capital stack, how I want to go about funding this business. Let's say I buy a business for $3.5 million. It has $1 million in EBITDA, and let's call it $6 million in revenue. So about a 15% to 20% gross margin, net gross margin on the business. So I'm debating between leveraging this to the hilt, right? So getting that SBA loan myself, just putting 10% down, and financing the 90% of it. I've done the math on that and the calculations. So that million EBITDA, typically if you leverage it 90% at the 10.5 interest rate that the SBA has, typically about half of what you're making on the EBITDA would go to the principal and interest on this SBA loan. So these SBA loans are 10-year loans if you're just buying a business. If you have real estate attached to the business, they can go up to 25-year loans. So if more than half of the building is in the purchase price, so if you're buying like a big warehouse and a business, and more than half of the building is in the purchase, it can be amortized up to 25 years. Anywhere in between, they kind of blend the amortization between 10 to 25 years. So like a 15-year if only 30% of the building is part of the purchase price included in it. So pretty exciting. I would love to have the real estate in it. Obviously, as you know me, I've bought 750 multifamily apartment doors, done 1,500 single family flips. So I'm very familiar with real estate. Love to own like a warehouse attached to the building. Maybe someday if the landlord, we're leasing and the lease goes up, I would definitely offer to buy just outright the building as well, just to have that control. You can do a cost segregation study on the building and write off a ton of it on your taxes. So that is a plus if it does have real estate attached to it, which I did look at one business that had real estate attached to it. And I mean, it does hurt in terms of like the cash flow and the capital and equity that you need. But I mean, you're going to be renting the place anyways, which the rent probably would be more than the mortgage, because typically they have a 5 to 6 to 7 cap rate on the buildings that they're producing, and what a seller, if they'll lease back the building to you or the landlord. So I would think you'd come out positive. It just is a little more capital intensive for that down payment and everything like that. But what's nice is you can still do the 10% down payment. So traditionally in commercial real estate, buying a warehouse or a building like that, you would have to put 20 to 25, even 30% down in this type of market, where here you can just do 10% down because it's wrapping up the kind of the SBA guidelines that let you do 10% down. So this is really highly levered, what you can really do. So going back to the the kind of the economics and the cash flow on it. So if I bought $1 million EBITDA business, leveraged it to the hilt, to the max of the SBA loan, half of that is already gone away. So then I'd have 500K EBITDA. So now it's not EBITDA because there's interest off of that, but I'd have 500K still left around. So I mean, I still have taxes, I would assume, right? 30% taxes on that million. So now I'm making 200 grand. So I mean, it really whittles down very quickly when you start doing this. And it's really just hopefully that you can start growing this business 5, 10, 15, 20% a year and kind of get to the safety zone of that SBA loan. And obviously with the 10-year amortized loan, you're paying down that principal really crazy and really fast. All right, so here is option 2 on the capital stack, is perhaps I may just leverage this 30% with an SBA loan to 70%, maybe 50% would be a sweet spot, and maybe get hopefully a seller note. So some, or actually quite a few sellers, are willing to do at least a 10% seller finance note, typically at a 6 to 9% interest rate over 5 to 10 years. And they may even defer the interest payments for a couple months to help you get the ship selling on the business and gather up some cash flow on it. And so yeah, that'd be nice to get like maybe 30% SBA loan, 30% seller note. That would be amazing. So then I would just need 40%. I'd put probably 5, 10% down on my own of the purchase price, show a lot of skin in the game, and then perhaps raise money with investors. So there's tons of investors out there that have, already done a business, done this whole entire M&A thing, private equity as well, that's willing to back me, that I've talked to through other conferences that I've went to. And there's also just, just the high net worth individuals who I could gather up, 10, 20, 30, 40 of them, put in 50 grand to 250 grand each of them, and pool that money together, and then give a preferred return, some profits, profit splits. And then obviously I would take a salary and some fees to grow that business. So there's another option. I'll dive in more on those economics and what type of rate terms I'm kind of seeing today, talking with other searchers to line this up. It would be a lot safer doing it plan B with less leverage, but I'm raising investor equity. I don't have enough to fork over the whole entire 50% or 40% down payment for this business, as mentioned. But, maybe giving up a little bit of equity is nice because I'd have higher cash flow, a little bit more safety in the business, obviously some mentors and people to talk to with the investors. It would obviously help the ship sail a little smoother through the rough waters of the first few years.